A warm welcome to everyone who has tuned in for our second panel of the day with traditional banks. This panel is focused on traditional banks who have developed unique digital propositions and are at the forefront of payments, merchant acquiring, and agency banking. Our speakers today are Edwafon Jaffet, Head, Business Solutions at Guarantee Trust Holding Company, Chuma Izirim, Group Executive, E-Business and Retail Products at First Bank of Nigeria, Adeolu Bajomo, Executive Director, Information Technology and Operations at Access Bank, and last but certainly not least, Isaac Kamuta, Group Head, Payment Service, Cash Management, and Client Access at EcoBank Transnational Incorporated. Just to go straight into the questions, First Bank of Nigeria and Access have sizable agency networks. ETI has its Pan-Africa switch and card scheme, while GT Bank and Access are carving out payment subsidiaries. Can we discuss the strategic options each of you are considering in unlocking value through your respective digital propositions? Let's start with you, Edwafon.
Good morning. It's a pleasure to be here. One of the benefits of running a banking franchise is that you're able to play in different financial services and digital platforms. And you kind of over time see where most of the value is and see where the growth is likely to occur. In GTCO, we've decided that the growth areas are really in payments and in that fintech space. And that's why we've decided to spin off a payment subsidiary. When we look at mobile penetration, when we look at the growing SME base, we feel that these are the things that will drive the payment industry. And when we look at the investments that are coming into that sector as well, it's obvious that everybody sees growth and potential in that sector, and that's where we've decided to play as well.
Thank you very much. So if we could just go to Isaac, how do you plan to create value for your shareholders?
Thank you, and I think for us at EcoBank, our first realization is that I think focus on payments is critical. We definitely have got a Pan-African, banking network covering the 3 countries in Africa, and ensuring that this network is utilized by anybody that wants to do business in Africa is a key priority for us. And therefore, first, the first thing that we want to do, or we are focusing on, is ensuring that this network is made available to anyone that wants to do payments within Africa, whether they're in the African continent, whether they're outside Africa, anybody that really wants to play in the payment space in Africa. We try to make sure that this network is made available to them. And so by beginning to have that focus and delivering that network in a seamless fashion to our customers, I think is absolutely critical. Now, of course, we're doing that with the customers at the center of everything. The idea here is that whether you are providing those services in the Nigerian market, from a domestic point of view, but we all know that there's all this, intra-Africa movement as well. We want to make sure that that value is not only realized in Nigeria, but those same customers are then given access to Africa, from one place. So really, if you look at it, is ensuring that if you connect with us in one point in Nigeria, you not only have the Nigerian market from a payments perspective, but you also have actually the 3 countries delivered to you through one single integration. And we think that's a lot of value for our clients.
And Ade? Ade, I think you're still on mute.
Thank you, TLC. I think for us, really, it's really about unlocking value. When you look at the market and how it's grown, especially over the last 4 years, fintechs want what the banks want, which is a large customer base. Banks typically want what the fintech want, which is to be agile, to be innovative, and to provide really compelling customer proposition that drives growth and real value, really. And for us, really, our proposition goes beyond just payments, really. Our proposition is to provide really enduring value across a number of spaces, really. If you go back and look at our 4-year strategy, we said very clearly from there that we want to be the gateway into Africa. And that gateway is in many forms and shapes, so to speak, really. And you can look at a number of our digital propositions. If you look at Access More and internet banking today, we have over 10 million unique customers. If you look at, and if you look at what that is doing, it's competing sometimes with the best of the best, yeah? Not just within Africa, but outside of Africa, winning awards as well. You could almost, so to speak, take that and make that a digital bank in its own form if you really want to take unlocking value to the extreme, and the same goes for some of the other propositions we have, whether it's in corporate banking where we have Primus Plus or trade finance where we have trade propositions. But then you look at our digital lending propositions as well. Again, that's probably one of the most enduring on the continent today. And if you have any Access Bank customers listening, you only need to dial *901 *11#. Within 10 seconds, we can have a loan disbursed into your account, provisioned and disbursed into your account. Those are really strong value propositions that we think that, going into a pay call and basically unbundling each of these as we go along can really release real value for our customers, but also for those who are shareholders and our employees as well.
Thank you, Ade. And you, Chuma.
All right, thank you, Toyo. So for us in First Bank, digital is very core, to our delivery of banking services, to our customers. Okay, we do this using different platforms. So we see our business as a platform play. Okay, we are a 127-year-old financial institution with over 32 million customers spread across 8 different markets in the UK. Okay, the good thing about our customer base is that over 50% of them bank only with. We've also, as you're aware, developed our agency banking, which is also helping us to serve the customers today unbanked. So for us in First Bank, we believe that opportunities exist, for banks, to disentangle some of the platforms or businesses that are not very core, to their business. And that even when they do that, okay, the spring of entities, okay, or entity, would accrete value, to the enterprise, and also they complement, what we currently do, as a bank. So that's how we see, what is happening in the market. Thank you.
Thank you very much for your responses. So this next question is for Chuma and Ade, and it's on agency banking. So could you talk us through how you're thinking of the opportunity here and how this network evolves from just being human ATMs? There's an argument that with SANEF agents, most are primarily serving already banked customers. But how do you leverage this to drive financial inclusion when all the banks essentially have access to the same network? We could start with you, Chuma.
All right, thank you, Tolu. So for us in First Bank, first, I think we are very proud of what we've done, okay, as a bank, developing this business, in this market. The concept of human ATM, actually, our idea, which we implemented, with one of the processing companies in Nigeria. So we are very proud of, what we have done. Having said that, the non-exclusivity model of the agency banking business in Nigeria, and the fact that most of the services are highly undifferentiated, I think is impacting on the drive, to include more Nigerians, in the financial services, industry. Okay, so these features, have their implications, which I don't want to mention here. Having also said that, the truth is that the market as it is today is highly fragmented, with players that have different objectives. I think that the current structure is not sustainable. I believe that with time there will be consolidation in the market. For us as a first bank, agency banking is core to what we do as a bank, and we are committed to building a model that is sustainable, that would help us, to reach the underserved and the unserved segments of the market. Thank you.
Thank you, Chima. I'm keen to hear your thoughts, Ade. Do you agree with Chima that there's going to be some consolidation in that space? How are you thinking about agency banking at Access Bank?
It's actually a very interesting space, really. Without a doubt, when you look at certainly the African space, agency banking has to be the natural extension of traditional banks, traditional banking. I mean, when you look at the cost of brick and mortar, the penetration of digital, there will still be certain services that digital alone cannot provide. So for us, really, we see digital, when I use the word digital, I'm talking about the ability to use feature phones, smartphones, and provide really, really endearing services as primary. But the natural, if you like, last mile to that service provision has to be agency banking, because some people want cash, some people still want that personal interaction, and so on and so forth, really. And there are a number of services that we're providing through agency banking. So you will see that growth certainly continue for us. We're very clear about that. That growth will happen for us in Nigeria. It will happen across all our, all the entities that we operate in very, very clearly. But the competition, as Chuma has alluded to, is extremely stiff and will remain stiff. There's no question about it. You have to compete based, quite frankly, on cost. Because the agents can be very finicky in terms of pricing. They can be very finicky in terms of service, because you have somebody standing in front of you. So your platforms must work 24/7 and as much as possible non-stop. And indeed, your service levels in terms of servicing those agents has to be second to none as well. So all of those are what will drive competition. All of these things are what's going to eventually determine what the ultimate winners will be. And without a doubt, consolidation will be part of what will evolve eventually with agency banking. But I think when you look at, certainly when you look at Nigeria, the population of Nigeria, the number of banked customers, unbanked customers, then you really can see the space, where agency banking can play. And that space is still very, very large as far as we can see.
Thank you very much, Ade. And I feel I'm going to ask you the next question as well, because I think it's very pertinent for you and Edwin, especially as both your banks are spinning out payment subsidiaries. So what are your views on the intense competition for tech talent from well-funded fintechs and even global big tech? It appears that the banks are already on the back foot with regards to this. How are you responding to this talent drain in the ecosystem? And how can you realistically compete with the fintech dominated by engineers and have their risk basically taken by venture capital when you have the added constraint of having to deliver shareholder returns? If we could start with you, Edwin.
Okay, so I think it's obvious to all of us now that we're competing for talent, not just locally, but also globally. And I think that right now our strategies need to be global as well. The workforce has changed, especially through the COVID year. People have now realized that they don't need to be physically present in some premises to be able to work effectively. And the banks need to change. They need to become flexible and open to new ways of working. So today, before we always had staff who maybe would spend 10 years with us, 5 years with us, and come into work every day. But we're beginning to see that those tenures are shortening because people are looking for new experiences. They're looking for the next new adventure. And so we need to realize that those tenures are shortening. And maybe we then need to look at what are the core staff that I really need to keep. Can I use freelancing? Can I use shorter term contracts? Can I use people who are working offshore, but I use them for particular projects and particular tasks so that I can access the best talent and still be able to deliver them without looking for those long-term contracts that I always used to have. And then I guess it's the onus is on us to grow that talent locally as well. So all the banks need to be significant contributors to growing and harnessing tech talent. I know there are a number of partnerships with tech academies, with universities, but I think we all need to be more deliberate about it so that we can grow that pool of talent. And then we need to be more open to newer models of engaging this talent to be able to get the resources that we need when we need them.
Excellent. Ade, over to you.
Thanks, TOC. I think one of the really interesting things about the fourth industrial revolution, which is where we are today, people are saying it's coming to an end, we're about to start the fifth, is that it's happening everywhere in the world at the same time. If you look at the first, second thought, it will happen in some parts of the world, take some time before it gets spread out to the rest of the world. So you can almost develop skills and transport those skills around and build them locally. Here, everybody is developing at the same rate. There's a global shortage of talent. That global shortage of talent is not is something that we spotted several years ago as part of our strategy, to be highly digitized and to compete in the digital world, really. And we've been taking really clear actions in terms of addressing that. One is around obviously building local talent, building our people, forming partnerships globally, and indeed just providing what will be a much more endearing working environment. So this year, we went one or two stages further. We commenced the Advanced Africa Training Program in partnership with Udacity. Many of you may know Udacity, which is basically one of the leading online platforms for training. And the plan is simple, provide capacity far, far beyond what we need. Because it's not just about solving our problem. We have to solve this problem collectively across the wider society. My gain or my loss cannot be somebody else's gain or loss. We just have to do much more in the environment, really. So if you take Advanced Africa Training Program, we plan to impact 2,000 Africans. 65% of those will clearly come from Nigeria, which is the base of our operation. And indeed, proportionally, when you look at population across Africa, that makes sense. The other 35 will come from outside of Nigeria, really, and a number of levels there. We're training people on real digital skills, which actually help them, to get jobs, but also work with us if indeed they meet up to the criteria. But also, very important for us is developing the female talent, because that's a very, very untapped. We still believe it's not as tapped as it can be. And we've commenced the Female Digital Academy. For us, that's a 4-month program. Where we're training, women who qualify and have the baseline skills on mobile app development, front-end development, back-end development, Python for data science, and basically all of those to contribute to actually drive those skills. The reality is this, that talent war will continue. It's not going to ease anytime soon. And I think we just all have to do more collectively to create more capacity within the industry and the society at large that we can all tap from, but also keep developing really, really endearing, if you like, work practices to retain the talent that we need to retain as well.
Great. So moving on to another topical issue. I wanted to address this question to Isaac and Chuma. With the increasing adoption of digital currency globally, the Central Bank of Nigeria has responded by introducing the e-Naira. How will this work, and how is it different from what the banks already offer? Can we start with Isaac, please?
Yeah, thanks, Tos. I think that's a very, very topical and I think very, very, very good question. And we all knew that it was going to happen. It was just a question of time. And I think when you look at the e-Naira and the approach that the Central Bank of Nigeria is pushing, it's one of where they more or less control everything. I think from the still early stages, of course, it's still evolving. We're still looking at how they want to do this. But you can see that they want that approach of still ensuring that there's control within the central bank. and then leveraging the banking industry to be able to support, whether it is on, funding, the e-Naira wallets, ensuring that you're using the banking industry to be able to, to fund there. Also, even I think I see it extending as well to agency banking as well. I'm sure they'll be able to go to agents and still be able to fund you an e-Naira. So you'll still see, really from a central banking point of view, they're still trying to, have command and control and dictate what goes in there. And I think it is still early stages, to be able to evaluate how that will go. That if it's launched properly, you can create a very good ecosystem, because for any wallet, the most critical thing is the ecosystem that you're able to generate. And because they are central bank and they have regulatory authority to be able to bring in all the players, the banking industry together, it can still be able to evolve and become a very powerful way of trading, because all you need to do is then connect the pillars, connect that to as many termination points as possible, and then all of a sudden people have got a new way of paying. So I think that's the approach that the Central Bank of Nigeria is taking. Now, of course, as EcoBank, given our 33 presence in Africa, we're also seeing the same sort of thing coming up with other countries. Ghana, they're also in the process of doing and ECD as well, and a couple of other central banks in the countries are all evolving. And I think if you take that and look at what the banks have traditionally taken, the play they have taken is within each of the bank has been trying to do something. Every bank has been trying to launch some e-money of some sort in partnership with the telcos. I think for Nigeria, we have had the bank-led sort of model. The other countries outside of Nigeria, they've had the telco-led model, and it has got its own weaknesses and the strengths. I think the one that has taken off mainly has been the telco-led model, where we have seen the growth, whether it's M-Pesa or you go to Ghana, where the mobile money has become big. So it is still very, very early days. But I think it throws in a spanner in the works in terms of how will banks evolve in this. Do you then continue leading that bank-centric model where each bank is trying to do its own thing? Do the banks step back and say, hey, wait a minute, can we do something together as a financial institution as well? Or do we just then, support what the central bank is doing? So I think it is still very early days. And from a regulatory point of view, we're watching and participating, but I think it's still very early days. Thank you.
Thank you very much, Isaac. Chuma, could you share your thoughts with us on the e-Naira and how the banks are responding to this, or how First Bank in particular will be responding to this? Okay,
so for us as in First Bank, I think it's a welcome development. It's what we've observed, that central banks all over the world, are implementing. So Nigeria cannot be an exception. I think that the introduction of e-Naira in the market will change the competitive landscape. Okay, based on the features, of a digital currency and the role of the central bank in the e-payment ecosystem. Okay, it's going to change, the competitive landscape. The impact for now, the information we have is still sketchy. We don't have the detailed operational modalities and the commercial structure. But I think that, the impact, will depend on the role each party plays in the e-payment ecosystem. For banks, I think that we might, it might affect, the balance sheet, some of our revenue lines, and from what we've seen some markets, they produce cross-border transactions, will also affect that aspect of our business. The major beneficiaries, from what I can see, will be banks that have, wide and robust, distribution and acceptance networks. Thank you.
Excellent. So now we spoke about competition for tech talent. Now, I wanted to drive the conversation more towards competition for actual revenue and market share. So I'm going to address this question to Edward and Isaac. What are your views on the competitive environment, especially between banks, private fintechs, and telcos? How do you see this competitive dynamic going forward in Nigeria vis-a-vis other African markets? We could start with you, Edward.
I think when we look at the fintechs, we look at banks and telcos, we're frenemies of sorts. So we're all growing, and we're all growing on the back of each other. So you see the fintechs growing on payment rails that the banks have provided, and the banks also trying to deepen their market on top of infrastructure rails that the telcos provide. And I think that each of us has our unique strengths and our competitive advantages. And going into the next couple of years, the winners, I guess, will be the organizations who are able to leverage those strengths and be able to deepen the market. So today we have a customer or population base of over 200 million, but the fraction of that is actually being served by these entities are really small. And I think that as we all attack the market, that will begin to deepen and go further down the bottom of the pyramid. And I guess it's the organizations who are able to create the best experiences, customer experience, and deepen that market who will eventually succeed and survive. The regulator, I think, will also have a big part to play. We've seen in other markets where we have telco-led financial services, and I think that the regulator in Nigeria has somehow tried to keep some sanity in the system. Beyond the policies, there also been the infrastructure that they've put in place. So digital products grow on the back of identity management and being able to identify people digitally, being able to do real-time payments. And those are the things that the regulator has put in place. And I guess will allow this market to grow. So going forward, I expect that the customer will be king. As we all go into the market, we'll begin to deepen this market and offer better and more sophisticated services. That's what I expect to see.
Thank you, Edward. Isaac, could we pick your brain a little bit on how you're seeing the competitive dynamics play out?
Yeah, thanks. Competition is always a good thing because it forces us to do our best. I think it's Henry Ford, if you recall, who said that competition whose motive is merely to compete, to drive some other fellow out, never carries very far. He said, the competitor that you need to be worried about is the one that never bothers about you at all. And is every day he just goes on making his own business better all the time. That's what Henry Ford said at the peak of the competition in the auto industry. So I think competition is good because it makes all of us better. But I think it's also good to just step back and say the telcos, the fintechs, and the banks, they are solving specific problems in the marketplace, because that's what business is about. It's about what problem are you solving. They are helping remove friction and actually help drive economies forward. On the other side, if you look at the banks as well, there's a specific role that banks are playing, whether it is in working very closely with the regulators to achieve certain economic targets that the government needs to have. You still need structured lending. You still need multiple products in the industry to be able to move the economies forward. So there's a very clear role for banks, but we also understand that the telcos are also playing a very important space, and even the fintechs are also playing a very important space, and especially removing friction from the system. So I think, as Erufon has said, there's going to have to be collaboration, but at the same time there's going to be competition. Collaboration is because we need each other. If it's a bank, I need the rails or the telcos to be able to provide financial services. And the telcos or the fintechs also need banks to be able to deliver their services. For example, as you had me mention, if you look at the EcoBank network, 33 countries, and you are fintech that wants to scale very fast in Africa, then it makes a lot of sense to to leverage those rails, because if I can connect you in Nigeria, you're having access into the 3 markets in one instant. You don't have to go repeating that scale across those markets. So in that instance, you need those rails for you to be able to scale up quickly and also develop the value that you need. So there's always going to be that depending on each other to be able to build services. So I think there has to be collaboration. There's going to be competition. At some point in time, you find ourselves competing against one another, but I think it's something that's going to exist. At the end of the day, I think it is the customer that is going to be the determining factor. And I think the customer experience, and I think as Edifon said, really growing the market. Is no point of competing over 40 million people when there are another 200 million in Nigeria that we can all serve. So our ability to deepen that market, provide differentiated solutions, solve specific problems in these regions, in these markets, I think that's going to be absolutely critical. So it is a healthy thing. It will continue to to exist. We need each other. At the end of the day, the customers are the ones who are going to really be the determining factor. And of course, as we said, regulation is important. Regulators drive everything. They drive behavior. So whichever side the regulators want, you'll find the economies and the businesses gravitating towards that side. So it is going to be, I think, competing at the same time, collaborating and trying to solve the problems that exist in the Nigerian market and I think Africa in wide.
Thank you very much, Isaac. I completely agree that it's a delicate balance between competition and collaboration. And I like the way Adolfo phrased it. You and telcos and fintechs are frenemies. I think that's a key takeaway from this conversation. So my next question I'm going to address to Ade. What are your thoughts on the current fintech valuations that we're seeing in the market these days? And how sustainable do you think they are? And I guess to lay on that question, how is your bank unlocking strategic value through your own digital propositions in response?
That's a very interesting question, Toyosi. Valuation is an interesting thing. And there are all sorts of, you guys know it better, there are all sorts of models around valuation, and there are all sorts of emotions around valuations, and there are all sorts of insights around valuation and where you see things going as well, really. I think, many people will tell you, depending on where you sit, if you sit on the side of the traditional valuers, then they'll say, can anyone explain how, 6, 7 tier 2 banks with clear assets, not physical assets, number of customers we can see, et cetera, all added up can be worth less than one fintech with less assets, less customers, et cetera. I think that's all about a play into the future, how you see the future. What is very clear these days for us, certainly, and for us in Access Bank, is that valuation is clearly also a function of whether people believe you can solve the real problems of the future. And whether you have a team, you have the capacity, and you have the capability to be agile enough, to be adaptable enough to solve those problems. And I think that's a key part of the valuation story, really. So there are many ways you unpack that. You unpack that by what you're doing. When you look at our base in terms of, for us, in terms of number of customers, our ability to integrate very, very smoothly and grow our base consistently, compete with the best fintechs in the digital market. All of that is great, but it's also clear that putting all of those, if you like, in the banking framework does not actually unlock the value. So being able to, like I said earlier on, unpack these assets, so to speak, and put them in PayCo. And there's a whole plethora of assets. Some of them we know today. Some of them will come as we adapt and we compete into the future businesses that we can see and into solving problems regarding, being the gateway to the African market, from all the other places as well. So for us, the PayCo is not about payments. It's really about being able to offer a plethora of value-added firms that are solving deep problems in payments, in lending, in data and data insight, and across a whole plethora of items. And if those valuations compete with fintechs or exceed fintechs, great, as it were, really, but also making sure that we run a robust, solid bank that is well regulated, highly compliant, and can compete with the best in the world, and not necessarily Nigeria.
That's very interesting. So, Chuma, can I ask your thoughts on this same question as well? How is First Bank planning to unlock strategic value through its digital propositions? Sorry, Chuma, I believe you're still on mute.
Okay, sorry. Yeah. So like I said earlier, for us, it's a platform play. Okay, so if you look at our digital banking business, it comprises of several platforms, and each of those platforms, we use to address specific segments of our customer base. Okay, so how we look at unlocking value is actually, from the point of view of, how core is that platform to what we do as a bank. Having said that, okay, we also know that some of those platforms, when disentangled, from the enterprise, could, accrete value. Okay, so we look at payment, from the platform point of view, and when we begin to disentangle, it will be a platform based. Okay, and we believe that as a bank, we have enough platforms, okay, to really compete in the market. Okay, depending on which of the segments that we, which of the markets that we decide to play. Thank you.
Great. Edwafo, can we have your thoughts on this question?
So for us, we're leveraging focus. And I think that what the fintechs do very well is that they take a small area and they give it focus. And that's why some of those products do turn out sometimes to be a big competitor with the bank products. So what we're doing is looking at the key sectors where we think there is growth and potential. So focusing on payments, focusing on merchant acquiring, giving it strategy, giving it talent, giving it funding, so that we are serving the customers the best way, giving them the best products. Like Ade said, we're now competing in a global marketplace. So people are not just limited to local bank products, they're looking all over the world for what meets their needs. And that's what we're doing. So we're taking focus in key areas, and we're combining them with that successful bank franchise that we've already run and brand equity that we've already acquired, so that we can serve and deepen this market better.
Excellent. And Isaac, could you please let us know how ETI is playing this?
Yeah, I think it's the same thing. We are driven by the trends that we are seeing in Africa, and as you know, there are two I would say key key themes that we are seeing here. One, you got the intra-Africa trade, which is becoming a big thing. There's a renewed interest in a lot of things happening within within Africa. So that's an area that we are very focused in, and ensuring that we can be able to assist Africa, Africa trade and the payments within Africa, and make it as efficient, as cheap as possible. And that's something we can do, because of the geographical coverage that ETI, has, of course, with Nigeria being a very, very, very important market. If you think about the three countries we cover, the currencies that we are able to to handle, I think we are best placed to be able to assist anyone that wants to do business in Africa, with one-stop shop. So that's one area that we are very, very focused on. But the second one is also really facilitating those that are outside Africa who want also to do business in the African continent. And as you know, the African continent is big. It's still 55 countries, central banks, regulations, and all that. And navigating that, that can be, a big task for anyone, including the fintechs that want to expand here in Africa. Now, thankfully, ETI, from its inception, it was created to remove friction, that border friction. When you see EcoBank, the way it was created, from the inception, it was a Pan-African bank that has got banking assets in each of the African countries. It is not a one bank that belongs to one country and then try to do business or expanding to other countries. It was a Pan-African banking, group with assets in each of these countries. So the bank was created to remove friction across Africa and just make it very easy. And so if you look at those flows, all the multinational clients that are trying to do business access Africa, then we believe that, that is a specific, area that we can be able to assist and really help them navigate that area, remove that friction, and just make it easy to invest in Africa, through providing that one-stop shop, to international investors and fintechs that are trying to, access Africa, or big companies that are trying to expand into Africa, whether you are a big Nigerian company that wants to expand into Africa, and we should be there to be able to help you navigate that very easily, because we have already removed those borders. We have the banking licenses. We clear all those currencies. We settle those currencies, and we have the EcoBank Paris, at least international franchise. That's also helps us in terms of just the trading of those currencies in a more effective way.
Great. So my next question is also for Isaac and Edwin. In recent times, we have seen the regulator pay particular attention to the activities of fintechs, given their growing systemic importance. So my question for you is, what are some of the key factors that the regulator considers when performing its oversight functions? What does a regulator look out for when they're granting licenses or approving these? Edwin, please, could we start with you?
Okay, so and I'm speaking from my perception based on the interactions with the regulator. I think the regulator, for every new license they give, they want to know what value you're bringing to the market. What are you adding to the ecosystem? They don't just want to load on players, but you need to be solving a particular problem or adding something to the existing infrastructure. They're also careful that they're not introducing any systemic risks as they onboard the new players. So they're making sure that you're adequately funded, that you've thought through your processes, that you've thought through your technology, you've gotten the right certifications and complied with the right standards so that there's no systemic risk that you are introducing. And I think that they're essentially trying to create also a level playing ground. They don't want anybody to be a monopoly. If you look at the new licensing regime, where they've tried to separate mobile money operations from switching, from processing, just to make sure that there's equity in the market, it's open, people can play, people can innovate and grow, and essentially making sure that the consumers and the users of those products are still able to do so without taking on any additional risk.
Excellent. Isaac?
Yeah, thanks. I think just to add on what Edufana said, regulators, at the heart of regulation is risk management. The regulators are, the one thing that concerns them is always ensuring that they have control over risk. So in granting licenses or or licensing regimes, they will tend to look at, are we introducing risk? Have we defined the risk that actually we are taking? And as we license, do the people that we are licensing have actually the capacity to be able to manage risk? Now, if you step back to some of the discussions we've had here, the reason why fintechs have grown very fast is because they solve specific problems. And I think one of those problems is speed to market. They are quick, they are agile, they can take technology, deploy it very quickly. But I think one of the things that that comes with speed is also a whole issue around risk management. And the reason why the traditional banks have been seen to be slow is because over the years, they've made a lot of mistakes. And in the process, they've learned a lot. And when you make mistakes, then there are policies that are given by regulators and procedures and programs that you must adhere to make sure that you don't repeat those mistakes. So I think at the heart of regulators is ensuring that as they grant more licenses, the risk management side of this whole business is well thought out. And then secondly, also don't forget regulators across the world, they talk, they exchange information, they, you know, you may be looking at the regulator in Nigeria, but they are very much in touch with the regulators in the US, the regulators in other parts of the continent, they exchange information. And so as they sit here, they're also getting to understand what is happening in the rest of the world. And no regulator wants the same problems to end up in their own country. So I think to me, it's an issue around risk management as being very critical and in the heart of what, you know, what's going through their mind as they give more licenses. And of course, the whole issue around, you know, competition, make sure there's no monopoly. It's, you know, it's well thought out. There's no, you don't want to create a dominant space that becomes difficult to control later on. I think those are some of the things that are in the back of their mind. And remember, they always want to protect the population. They want to make sure that the users of some of this technology, they are, at the end of the day, they are citizens. And they want to make sure the citizens are not, they are safe and their transactions are okay. So I think it is really risk management, I would say, is maybe the key thing that they are considering, in addition, of course, to the other things. Thank you.
Great. Chuma, I'm keen to see if you have anything to add to what Isaac and Edwin Fong have said on this question of the role of the regulator.
Thank you. I think, between the two of them, they largely addressed, that question. So the regulator is concerned about ownership. They're concerned about the structure. They are concerned about, the technology, the risks, and then of course, the depth of the solutions, that the fintechs are offering. I think in Nigeria, we are lucky that we have a central bank, that understands, payments. So the licensing regime in Nigeria has been largely liberal. And, I think that to a large extent, we've not seen any need, to really, worry about the number of players in the market. So I would say that, without, repeating what, I've been said earlier, that, I think in Nigeria, we've gotten the licensing, regime right. And we believe that also that there's more room for players to enter the market. Thank you.
Great. So while I still have you, Chuma, I've got a question on agency banking. How much more room do you think still exists to drive financial inclusion? And how well can banks leverage the SANEF network to win new customers? Because when a customer visits an agent in Kano, for example, which bank account will he propose? What drives those dynamics?
Okay, I think, like I said earlier, the model we are operating in Nigeria is non-exclusive. So meaning that, any agent can serve any bank's customers. Okay, so and it works. I think the market is also benefiting from the non-operability of our payment system or ecosystem. Okay, meaning that any player can, once we hooked up to the national switch, can offer services to all the receivers. So for me, I think that the market is still shallow. There is more room for growth. That's what I believe. Concentration is still around the cities and the semi-urban areas. Okay, so when you go further down, you still find out that we've not really made much progress. Okay, so what I see that will happen, okay, in the coming years will be, that banks, the players will now start coming up with some, compelling value propositions, that will bring in, more customers, into the market or into the ecosystem. I also believe, like I said earlier, that when the consolidation happens, okay, you're also going to be seeing, some players that would have to bring a capital to develop markets that today are look unprofitable. Okay, so for me, if you ask me, I think that the market is still shallow, and we have room to really grow the business. Thank you.
Thank you, Chuma. And back to you, Isaac. We've seen a lot of pricing pressure, especially in terms of payments and agency banking. You could argue that there's a race to zero going on at the moment. How sustainable do you think this price war is? And how do you see it evolving going into the future?
Yeah, thanks. That's a very interesting one. And I think it is expected. This is a very competitive, market. When you start having, one agent serving multiple banks, then you can expect the type of competition that's going to be coming in for the services that are delivered over that side. So I think the market, the competition will continue. I think it'll only get worse before it gets better. I think there's a role that the regulator or the central bank has to play, because at some point in time, remember, at the end of the day, businesses are run on profit. These are profit-making organizations, and at some point in time, you have to make decisions. But I think the pressure for pricing will continue. I think it will force banks to be efficient, because when you're under pressure of pricing, the one thing that then comes to your mind is how do you get more efficient? How do you start thinking through what you're doing? You start thinking the question, why are you doing it? How you are doing it, how you're delivering. So there's going to be a lot of pressure that will come in, and the people will be asking questions, why do I continue to do this? Can I do without this? So that pressure will continue to exist, to the extent that, because as you know, in Nigeria specifically, there's a lot of controlled pricing as well, on what you can charge, and that sort of, puts a lot of pressure, on the system as well. So there's going to be a lot of innovation as well, because when you have pricing pressure, it also drives innovation. People start looking at other ways of doing things. They start questioning some of what are the industry practices, asking, are they still relevant for today? So I think it will go in until I think I would say a very, very, I would say until you reach the end point. But I think this is good to continue. Definitely, the regulator has a role to play in terms of ensuring that that the whole thing is sound and it makes sense for everybody. But I see that pressure continuing.
Great. And now for the last question of this panel, which I'm going to ask everyone. What is the next frontier for African payments, and how should banks position for this? I'm going to start with Edolfo.
Okay. So what I have seen is that when we all started out, we all leveraged foreign payment systems. So we all use cards. And in other climes where we have seen countries create their own homegrown solutions, I think that those have largely been a lot more successful. I think that as we go into the new frontier, that we'll begin to see a lot more homegrown solutions. We see what CBN is doing with the e-Naira. I think it's going to be fantastic infrastructure. If we're able to leverage it and grow our own solutions off of it, I think it's going to do extremely well. So I think it's going to be a very innovative landscape. And the people who are able to innovate and scale and grow are going to do very well. But definitely, my bet is on seeing a lot more homegrown solutions.
Thank you. And you, Chuma?
All right. So thank you. Very interesting question. So when you look at the markets, it's full of what I call plain vanilla offerings. So more than 85% of what we offer as financial service providers, undifferentiated. But I think that as the markets begins to mature, we begin to see innovation around digitalization of customer lifestyle needs. Okay, so for banks, there are strategic opportunity areas when you look at lifestyle needs. I think that most banks should begin to look at partnerships beyond payments. So you just have to know that they are not just partnering based on payments. There are other considerations. That's what is going to enhance that process of digitalizing customer needs. I also think that when you look at the lending space, okay, so there will be need for us to develop unconventional and new ways of assessing risks in those markets today that we consider not very attractive. And then lastly, I think that banks should begin to develop or enhance capacity around using advanced tools to come up with data-driven customer insights. So for me, the future looks very interesting, and I think that beyond the plain vanilla offerings, banks will now begin to, or the players will begin to innovate around what I call globalization of banking. Looking at customers' lifestyle needs. Thank you.
Awesome. And Isaac?
Yeah, so if you would have asked me this question a couple of years ago, maybe I would have had a very different answer, because if we thought, if someone had asked me, will cash disappear? Will cash disappear in the African continent? Maybe 10 years ago, I would have hesitated by saying maybe it may not go. But I think the future, especially in Africa, I think is cashless. I think we are now nearing that point where the future is going to be cashless. I think there will be a generation that will come and be told, once upon a time we used to have notes, bank notes that used to carry along. But I think the future of Africa is going to be, cashless. It took time before you could kill checks, and we've seen them buried. I think there are still a few left around. But checks have virtually disappeared, and I think they're on their maybe the final ride. So I think the future is cashless, and with the things like e-Naira coming in and all the digital currencies coming in, I think it's all driving that. So if the future is going to be then cashless, you can then expect all the solutions that are going to be built around that cashless are going to be really the plus for the future. And especially around lending, because we have solved the payments problem, has more or less been solved. We can do instant payments, you can do it on the mobile, you can do person-to-person transfers, you can do micro lending, small lending. But I think there's still a huge component there of a big need in Africa that has not been solved. And I think with the cashless Africa, now data being available, we should be able to then step in and start doing proper lending to the masses, so that people can still be able to borrow to buy a car, borrow to get your school fees, borrow to to finance your wedding, and in a very organized way. So I think we've solved a bit of the payments problem, and with the future being cashless, I think there's still a lot of potential in lending to be exploited. Thank you.
Thank you very much, Isaac. And I'd like to wrap up by saying a very big thank you to all our panelists for the excellent and well-informed insights that they've provided for us today. And of course, to our audience for joining in. Please enjoy the rest of the conference. Thank you and goodbye.